Hello, I hope everybody's having a great day. Here we go for another one of these Substack videos. As usual, no trade calls and recommendations are responsible on stuff. We're here for educational purpose only. So I thought we'd do a little bit of an update of the DXY framework here, especially as we're going into the CPI and PPI prints this week. Now, keep in mind that we were discussing, and we have been discussing for a while, the failed breakdowns on DXY, and the expectation was that we would come back and retest this 100 mark with a potential, again, ball underwater effect and rip back into 103s if things really get a little bit hairy, all the way back into 106s. Now, remember the broader framework, if you step back and you look at it, let's say going back on a monthly, this is what we're looking at, right? We've still got this series of higher lows that is holding, and we have this series of lower highs that's holding, even though here we've had a little bit more pressure recently. But the most important point, the structural focus of this is this multi-year range, right? We've been working with. So once again, every time we tried to move back below, in this range essentially was holding from 22 to 205. But every time we came back down, you can see here on the weekly, you had aggressive reversals even at the trend line, with price and market unable to attract new buyers at low, new sellers at lows, sorry, and bam, popping back above this pivotal 97 mark. And that's why, as we discussed in a lot of the services, we're looking for longs there for that pop back into 100. Now here going forward, focus remains on how we trade around this 100 level, not so much if we get daily closes or weekly closes above, because as you've seen in the past, we can get a little bit of acceptance above, but without getting any real traction. The risk is there at any point when we trip above this level where we trigger some stops or some aggressive buying? Probably that could come if the market has to reprice something, for example, rate path. But here, going forward, especially with the CPI and PPI, what I want to highlight is don't worry so much if we pop a little, if we don't get any traction. 100 is likely going to continue to be a little bit of a magnet. Equally, even if we get a little bit of a knee-jerk reaction lower, keep in mind that there's an awful lot of structural support, whether that is the trend line, whether that's 2026 open, whether you've got this confluence of moving averages. Of course, it's less interesting because they're flattened out. There's really no trend. But here, the levels too that will be interesting is, do we get a spike and a panic squeeze, or do we get a buyable opportunity here? Because essentially, unless something drastic changes, chances are we still either contained in this zone or we continue to try and probe higher. The base case is still for us to probe higher, take these high, and try to move back into the middle of the range. Having said that, even if we do get a squeeze back into 103, I wouldn't immediately be getting too excited for a move all the way back into 111s higher. Remember that the main theme, the main reference is still going to be this range. So equally, if we pop back into 103, that just becomes completely neutral inside 106, 100 range, with a 103 being the midpoint. And if you think about it, also it makes sense. What are we being saying? Saying this false break, especially, was on a lot of expectations every year coming in, with everybody thinking, okay, we're going to get 7, 8, 9, a gazillion cuts, which clearly weren't going to happen. So what's happening? The market is still trying to price that in, but it's not happening. So it makes sense that we're moving back higher, right? Now, even if we have to move back into neutral, this doesn't necessarily mean that anything has changed, right? So even if we do get one hike, maybe talk of 2 hikes, unless you get a complete hiking cycle, it wouldn't necessarily make sense for price to move out of this range. So bigger picture, it still makes sense that this is a very comfortable zone for the DXY, unless something substantial changes, then that's likely a very comfortable place for it to sit. So it doesn't mean we have to go there. Clearly, we can get some dips, but as far as I'm concerned, right now, how we're trading more recently, this is kind of like a neutralish zone, this 2026 open into this 100, where the market is trying to decide what the next move is going to be. Acceptance and traction above. Clearly, we're looking for squeeze back into 103. Should we get a dip that closes below the 2026 open, then everything shifts bearish again, and you'd expect it to flush, trying to come back into these lows, with the 97 being a little bit of a magnet. Okay, that's the way I'm looking at it. Hope it was useful. Wishing everybody an awesome one. Talk to you guys soon. Take care. Bye-bye.